Don't exclude or include normal income tax, cess, surcharge. So start with PBT, damages paid voluntarily, capital loss on sale or demolition of undertaking, subsidy received from government or quasi-government authority, and loss on revaluation or remeasurement. All these are not to be excluded. Now, average net profit of 3 years. What if I am in operation only for 2 years? And my average net profit then is not for 3 years. Do I count for 2 years? I believe when they say 3 years, then it should be 3 years. Hence, then in such a case, where I am less than 3-year-old, CSR should not apply. But then that is again a view which I am sure the government will come back hard against. But I believe if you are less than 3 years old, 1 or 2 years old, you are not covered by the CSR condition, because then your average net profit computation itself fails. 3 years are not there, and you cannot then say that then they should have said average of 3 years or part thereof. They have not used the words part thereof. Therefore, it has to be 3 and nothing less than 3.
That means first 3 years you are not governed by CSR.
Yes. That's what I believe. Yeah. Yeah.
This excess of expenses over income to the extent not set off in past. The brought forward clauses?
It should be that. Excess of expense over income to the extent not set off. Brought forward
Every
losses.
year we have to take payment.
Yes. So you'll have to look at it. If there are any carry forward losses, then you can get cognizance of that.
How to work on it? While working on the average, we have to take profit or loss of the particular year.
Yes.
And average it out.
No. Take for 11. Take for 12, take for 13. Now if there is any loss in 11 which you have not set off, then you, while computing, you can set it off.
After arriving at the average profit or loss, you look at the...
But I don't see, actually this they have referred to from 198, which is for managerial remuneration computation. Hence, it does not make sense when you're looking at a block. There would never be such a scenario unless it relates to a expense of the last year or something of that sort, which is carried forward. Like in 13, if you are carrying forward something which is not covered, then you will get a cognizance of that. Otherwise, every year is separate, and when you take a total and average it out, then nothing else will be required after that. But they have referred to 198, which is managerial computation, which is standalone per year. There is no concept of a block period. Hence, because you are referring to something else, this scenario does arise. Otherwise, in working out, it should not happen. Can a company spend more than 2%? So somebody is in a very charitable mode and he wants to spend more than 2%. Yes, 2% is a floor, not a ceiling. Would the excess be treated as charity? Now here we have section 181 of the Companies Act, which says, of the Companies Act 2013, which is already in force from September, which says that if you spend anything on charitable and other funds, then you require prior approval of the company by way of a general meeting resolution. I believe that does not apply to CSR spending, because CSR spending is a specific section provided under 135, whereas 181 looks at charity which is other than CSR. But if I do anything more than 2%, then the excess is charity, which may be covered or should be covered under 181, and hence that excess would require shareholders' approval if you spend more than 5% of average net profit for the 3 preceding financial years. Contribution to charitable and other funds can be undertaken directly also and need not be always to way of a fund. Now, how do I spend?
If I spend more than 2%, can I carry forward the next year? So that
No.
Suppose I set up a holiday home for 7 days for people.
Yes.
Initially I may have to spend a huge amount.
Yes.
And subsequent running cost may not be that much high.
Correct.
In that situation, whatever I have spent earlier.
No, you don't get a credit for past.
Can you prepaid CSR?
No. Because every year you have to look at your 2%. And the board is supposed to comment and contribute every year. So you don't get credit for past. And if you spent less last year, you're not supposed to make good this year. See, just as it's not a running block concept. Block assessment is there, but no block concept is there.
There's a project like this.
Yes, yes.
Holding home.
Yes.
Will not come out.
So you need to spread out your expenditure and ensure that every year you spend.
Suppose we
It's like your LRS. If you spend 75,000 less in 1 year, you can't take credit for it next year.
suppose we spend less, what are the penalties?
We'll come to that.
So even if I don't spend, I can clearly do a disclosure that because I have
Yeah,
already.
that will come to. What are the penal consequences? So that is correct. Currently, there is no harsh penalty. But currently, how to spend? 5 ways in which you can spend. Going from left to right, easiest to toughest. Donate to Prime Minister or other relief funds set up by a central government fund. Donate to any NGO. Collaborate with other companies. Set up your own foundation, trust or Section 25 or Section 8 company and carry out activity on its own. The last yellow block is the toughest. The pink one is the easiest. Donating to Prime Minister's National Relief Fund or Central Government Fund. Easiest way to do business, no headaches, cut a check, you're done with it. Simply contribute to PM National Relief Fund. You can do so even on 31st March, 10 o'clock in the morning, you realize CSR is not yet done. Write a check, end of matter. You get deduction for it and it's the total win-win situation. Everybody is happy, government is happy because they are getting money. Whether it will actually be done for CSR is another story altogether. Other central government funds set up for socio-economic development, relief for SC, ST, OBC, minorities and women. So this needs to be notified by the central government that this is the fund set up for the same. No state government fund. So unlike in ATG where you have Central Chief Minister's Earthquake Relief Fund where you can contribute to, you're not allowed to do that for CSR. And you get tax benefits under Section ATG for Prime Minister's National Relief Fund. We'll come to it when we come to the income tax section. Next, easier way or the next level of toughness, donate to an NGO or a trust or a Section 25 company which has got ATG or not, may or may not have got. It could even be an NGO set up by the company itself, by its holding company, by a subsidiary or an associate, or a totally unrelated NGO. If it is an unrelated NGO, then there is a caveat. It must have an established track record of 3 years in undertaking similar projects or programs. Experience in similar programs or projects as what? So if I want to do spending on education, then NGO must have track record in educational activities. If it is a medical NGO and I give it funds for an educational CSR, that I believe will not be treated as CSR because it does not have a 3 years track record of similar project or similar programs. But what if it is a trust which has 2 activities? One it carries out health, one it carries out educational. And it has a track record of educational and I want to spend on educational activities. Can I give it? I believe yes, because it does have a track record of 3 years in similar programs. Look at a third scenario. The trust has some activities which are not covered within the CSR ambit of Schedule 7. But it has one activity which is covered for which a company contributes to it and for which it has a track record. Would it be covered? Does it have a track record in similar programs? Yes. However, I have understood from somebody who informally checked with the ministry officials, they say the trust should have all its activities within Schedule 7. All of them must have a track record of 3 years. Only then can you contribute to such a trust. I do not see any such wordings anywhere in the rules or the act. If what I am contributing to the trust has a 3-year track record and if that is covered in the Schedule 7, I believe that's good enough compliance and you don't need to look at what else it does. But the view which they are taking is that not only must he have a track record here, all his activities must fall within the purview of the 10 activities which have been listed and he must have a track record in all of those. Only then could such a trust be used. So they are reducing the scope of NGOs which is available, which I believe is a wrong move to be taken.
No, you mentioned the company can improve the activity itself.
Yeah.
Now, that would not work even in a company, you need a organizational structure.
Right.
So company sets up a society or a trust
Correct.
and to do the CSR activity. Now the second condition is 3 years track record.
That is only for external NGO, not for company setup.
But ultimately, if a company sets up
See,
a body,
yeah.
it will be either a trust or a society.
But it's not external. One set up by a company does not have track record requirement. If you are a company and you come to me, I am an independent party. I have not been set up by your company, then you have to look at whether I have a 3-year track record. But if you set up an external trust, a Section 25 company, that does not need to have 3-year track record.
At the initial period, that money will be contributed for capital expenditure.
Yes.
So I want to set up a school. The first requirement will be to buy land.
Right.
Next requirement will be to build the building. And then the third year, fourth year, maybe after I get all the educational bodies approval, then only I can start factory.
Right.
So capital expenditure will be covered.
CSR is covered. Even capacity building will be covered as well. Yes.
There are trusts which have been engaged in formal and informal education. Then the definition which has been stated about the education will cover both or only
When you say informal, you mean vocational education?
No, other than informal in this is, if you refer to the couple of last just now, there is one various religious trust also about the meaning of an education.
I don't think if you look at the CSR schedule, religious trusts would be covered because they say educational, vocational skills, that's capacity building.
Under 250 they have been considered.
But that is under income tax. I am talking the CSR schedule under schedule 7, the 10 items, that does not cover religious in any manner. And I don't believe religious trust would be covered unless it is carrying on some activity like ISKCON. It is carrying on food relief programs. So if you are using for preventing hunger or malnutrition, then that is covered. But if you give that for ISKCON, the main religious activity, whether that would be covered looks difficult. So what is so under 215 and 80G is not necessarily so under CSR and vice versa.
What about the yoga training, where they train the yoga?
Yeah, so rural sports
Instructors.
promote, whether it is training to promote rural sports, if it is, then it is covered. And that again, the training to promote is something which is in a little bit grey area, but otherwise yoga is a rural sport. Is it a rural sport? I don't think so.
Can be as a preventive.
Preventive healthcare, yeah. But that also, see, now we need to be innovative. So we need to see how. If it is to cure ailments, then no. But if it is to prevent, then yes.
There is another question. What about the cataract operation?
That is not preventive
because
healthcare.
it prevents the blindness. If you don't remove the
But you have got the ailment and then you are carrying on. You have two ailments. One is blindness, other is cataract.
Cataract is a natural thing.
Yeah, but that
Don't
is.
remove it, then it leads to blindness.
But it is not. I don't think it is preventive healthcare.
In that case, all illnesses.
Then otherwise everything would be a prevent because everything ultimately leads to something.
This chronic problem.
But that's why this needs to be opposed, and that is exactly what the Delhi High Court is hearing currently. How can you have something so stupid by taking out something so basic? And I believe that blindness, cataract, deafness, there's so many things which we can do in CSR. Why should it be taken out?
Excuse me.
Yeah.
If as we were discussing that 2% is the they cannot carry forward. For example, if a company decides to open an education institution, right, and it requires a lot of money, rather than spending it, we can take a loan from a bank, and the repayment can be towards the repayment of the loan taken for establishing the education institution, and which will be more or less equal to 2%. That will be good.
No. I don't think that would be covered because you're not spending it for these activities. You are spending it for repaying a loan.
That is for.
But it's not directly or indirectly. They have given you 5 ways. Now you can't look at a 6th way of what we want to look at. So if it is an NGO or a trust, you need to monitor how they are using funds, etc. So how does it work? Company donates to a trust, which is a Section 25 company or a trust set up by itself or an external NGO, and this carries out charitable activities covered under 135.
So you have to control that charitable.
No, you don't have to control, there's only a monitoring requirement.
What is the monitoring?
Company must specify the project to be undertaken by these entities with the funds contribute, specify modalities of fund utilization, and have a monitoring and reporting mechanism. They've given you flexibility to have the monitoring. So
Whether they are spending or not, you have to monitor.
So that's where the last line is there. Have a monitoring and reporting mechanism. So they need to report to you, this is what I've done. And then you may have an audit done.
If they don't use it, is there any permission? If they don't use it.
The trust does not use it.
For the particular year, they will use it the next year.
So then you may, but then you have done your job.
Yeah.
So you don't have to see what he has done forward. Whether he can accumulate, but you cannot accumulate. So your question of carry forward can be addressed this way. Pooled CSR. 2 or more companies can come together and decide to do CSR jointly. So something is too big for one person to chew on. So he may go to 2-3 other companies and say, let us jointly do it. In which case we will have different roles and responsibilities. You do this, I do this, and it's jointly we can do a big project. Here, the CSR committee of each company must be able to report separately on what they have done for that project. And the role of each company should be laid down for inter-se allocation. But here again, very important, 2% for each company, not 2% aggregate. So you can't say out of 2%, 1.99% one guy did and 0.1% I did. So within a group, parent and subsidiary cannot come together and say parent did 1.99, I did 0.01. It is 2% for each, and within that how they handle their roles and responsibilities is up to them. Now, if you're doing own CSR, as Tarunga was asking, that you need an organization, etc. So they are even allowing you capacity building for CSR. You can spend on staff, implementation agencies, if you are setting up your own CSR unit for carrying out CSR. But it is only 5% of the 2% which you can spend. So 0.1% of your spending you can use for capacity building, hiring people for CSR within your organization, etc. Total should be maximum 5% of total CSR within 1 year. So that's 0.1%, 5% of 2%. Foreign company, interestingly they even covered foreign companies within the scope of CSR. So I guess we'll skip foreign companies. I'd like to touch upon the tax issues which are more.
Somebody is spending on education, say computer literacy, and those people who come, you may charge a nominal fee. That is permitted or it should be totally free?
You may charge a nominal fee, but then that fee should again be used for CSR activities. No surplus.
One can charge.
Seems you can. Now there is a big question mark whether you can charge or everything should be free, because sometimes you need to charge to expense your cost.
So people don't value whatever
what is free. Correct.
Donations to these cancer organizations and all will not fall.
Will not fall. Unless it is covered within preventive health care.
Yeah, if you donate to CAPA, then yes.
What is CAPA?
That is cancer awareness program.
Awareness, yeah. Not cancer AIDS program. So if you are giving an aid to cancer patients, that is not covered.
There might be a case wherein a trust is carrying on different kind of activity.
Exactly, that's what I said, that the ministry's view is that all the activities should be covered within Schedule 7. I don't believe. I believe only the activity which I am contributing to should be covered within Schedule 7, and he must have a 3-year track record for
See,
it.
for example, if I am contributing to a eye institute or cancer institute, institute may be carrying on awareness as well,
right,
as well as the other thing. I am not knowing for what activity I am probably donating towards cancer. It's not specific whether I am doing for awareness or.
So you have to specify I am doing for awareness in my view, and you must, in the monitoring mechanism, tell him that you must use it only for awareness, not for treatment.
That might not be feasible all the time, right?
Well, then MCA will look at it unfeasible. Since you have to look at your point, it is feasible. Why is it not feasible? They can have a distinction between awareness and treatment. You give him a clear-cut guideline, and he must give you a report that I have used it for this purpose. That is the preamble on which I am giving you the donation.
Like 80, you can donate to the purpose.
Yeah, purpose or income.
Anup, the previous way when you say capacity building, does it mean to the admin expense?
Does it mean?
To the administration expense?
They say staff and office expense. I believe even some sort of admin expense should be covered. Because otherwise, how do you carry out your own capacity building?
But then how do you cap it at 5%? What if your expense goes beyond 5%?
Then it is not CSR. You can spend more, you spend more on it, but then it is only treated as CSR up to the level of 5%. So we'll skip this foreign company thing, because I guess we have a little less time. We'll go to tax benefits, which is quite important. Do I get a tax write-off for the CSR spending which I do? Is it an appropriation of profit and hence not allowable? Is it an overriding obligation created by law although computed with reference to profits and hence allowable, which is what I feel it is it a deduction allowable under section 37(1) under principles of commercial expediency, which again I feel it should be available. The draft rule specified that tax deduction would be notified by CBDT. This line has been deleted in the final rules. So what does that mean? Does it mean CBDT is not going to allow at all? Is something which we need to look at. Now let us look at some examples based on cases which have been decided where CSR has been allowed under 37(1) and has not been allowed under 37(1). First, let us look at some cases where they have been allowed. In Bombay High Court decision, payment to a hospital based on the turnover of a company was allowed as a deduction, since in return, hospital gave free treatment to the employees of the company. This was payment made to Bombay Hospital, and one of the mills said, I will contribute 0.2% of my turnover to you, a corpus donation. In lieu of that, you give concessional or free treatment to my employees based on their grade, in addition to the other free patients which Bombay Hospital treats. Bombay High Court said no direct nexus, yet this was allowable as 37(1) deduction because indirect benefit was coming to the employees. Now under CSR, you cannot give anything which exclusively benefits your employees, but they can be incidental beneficiaries. So if such a thing were to happen under CSR and I tie up with a hospital and tell them you give health checkups, which is preventive health care, to my employees and to others, and for that I am contributing, this is one judgment on which you can rely and say that give me a deduction on that. But of course these are all quite old decisions. How courts would currently look at is another story, but this is something which you need to make out a case based on the facts and circumstances.
But in current scenario, it is directly giving a benefit to the our
But not only giving benefit, that's what I'm saying. You don't cap it as only my employees, you give everyone, including my employees. That there is no restriction. Payment to a trust which ran a school where employees' children also studied. Here again, Mahindra's case, Bombay High Court has said predominantly staff welfare, deduction available under 37(1). This is a very path-breaking decision of the Karnataka High Court in Mysore Kirloskar, and I believe after Supreme Court and escorts a little bit dicey, we'll look at why. They gave a donation to a school which was in the form of a trust set up by the company. So the company set up a trust which ran a school. The employees' children also studied there, not only studied there. They got 80G for making the donation, and they also claimed 37(1) for making the donation. The Karnataka High Court said 80G and 37(1) are mutually exclusive, both are available. The fact that others also take benefit is not material. It is for the purpose of business, not restricted to earning profits alone. Commercial expediency must also be considered for 37(1). A very important decision of the Karnataka High Court, Mysore Kirloskar, I think 166 ITR, where they have given both 37(1) and 80G. In this Madras High Court decision, payment to a Gram Panchayat school where company's employees were given preference. So here they were given preference in admission. So if there were 2 seats and one only was vacant, the company's employee would get a preference. The Madras High Court said it generates goodwill for the company. Fact that general public also benefits is not material for claiming deduction under 37(1). And Madras refineries, Madras High Court decision directly seems to be on the point. Company gave aid for drinking water facilities to poor in the vicinity of the factory. It said it is a goodwill gesture as a good corporate citizen since it was in a polluting industry, and corporate responsibility is also a factor in considering 37(1). So this seems to be directly relevant for CSR, Madras refineries, Madras High Court. However, in another year of the same SSE, the Supreme Court has set aside and remanded the High Court's decision and sent it back to the tribunal on the fact that did not find any fact whether aid was actually given to residents living in vicinity of factory or was it given to everybody and anybody. So on this fact, Supreme Court has remanded the matter back to the Chennai tribunal. After that, there has not been any hearing forward on that. In this one Rajasthan High Court decision, construction of a fountain on a traffic island allowed as advertising expenditure even though far from the place of business, because they said it generates publicity for the company. Again, aid to school where employees' children study, not necessary that entitled to whole benefit and nobody else must share such benefit. Fact that somebody else also benefits is not a problem. This is Rain Bakshi, similar to somebody who was asking about pharma companies. Rural development expenditure or providing medical aid to poor allowed as an advertising expenditure to a pharma company since it generated goodwill and promoted indirectly the company's products. Now this has been taken away unless it is preventive healthcare. In HPCL, Mumbai Tribunal has said expenses on 20-point program at the instance of government is allowable since done as a responsible corporate citizen. I believe this principle should be applicable even for CSR because it is being done at the instance of the government and there as a responsible corporate citizen. This is a Mumbai Tribunal, Hindustan Petroleum. So that should be an principle. And the last one is Ahmedabad Tribunal in Lubrizol, that is last year only. Community welfare expenditure for employees, children and others in terms of a school building and toilet for villagers near the factory is treated as good corporate citizenship. So these are all examples where the courts have allowed deduction under 37(1). Where are they not allowed? Bombay High Court has been at the forefront in not allowing Standard Mills and Voltas. Expenditure for Bihar flood relief by Tata Motors and Voltas and social welfare disallowed. Theory that long-term benefits to company is too far-stretched. They said there will be long-term benefit in the form of goodwill and good corporate citizenship. So Bombay High Court said that's too far-fetched a theory. You cannot get deduction under 37(1) unless you prove that the payment is actually business expenditure. So this was something which was a negative which has been used again in Standard Mills by the Bombay High Court. Free ICAM. Somebody was asking what?
The only thing will be these are the cases where the expenditure was incurred voluntarily.
Right.
Now that there is a legal compulsion on me,
that's what I'm saying. It should be.
I think the entire High Court has to look at the.
This is the one. This is the one on. This is the one which may be relevant. Expenses at the instance of government. PSU being asked to comply with it under the PSU corporate social responsibility guidelines. There they said it's done at the instance of government. Hence it's allowable.
But now that was the administrative structure. Now it is
No, they have PSU guidelines, so which have to be followed by all PSUs.
So now there is a
Additional. Yeah. Free ICAM organized for, this was a cataract camp organized for workers and outsiders. So the Punjab and Haryana High Court said you have no records of how many employees attended, how many outsiders. Hence ad hoc 50% disallowed. No logic as to that. They said only what is done for the employees is allowable. This is Atlas Cycles, Punjab and Haryana High Court.
citations would have helped.
There's too many citations, too many judgments, and that unnecessarily clutters but we can look at it separately. Aid to school where employees' kids also studied and hospital where employees' kids also got treatment. Benefit, if at all, to employees was quite remote, hence totally disallowed. So in Punjab and Haryana, they at least ad hoc, here totally. In this one company, a mining company took up community development of religious functions, art and craft, etc. They said no benefit with the company's line of activities, hence totally disallowed. And cultural events for differently abled children, no nexus between company's business and that, hence totally disallowed. In any event, would it be allowed as a deduction from book profits? Yes. And hence for computing MAT, it is definitely a deduction. Because CSR is to be reduced from PNL and hence your book profits go down. Can I get a double deduction under 37(1) and 80G? Now that's what Mysore Kirloskar, Karnataka High Court says yes. But if you look at Escorts 198 Supreme Court, there it was a case of capital expenditure and the company wanted to claim 35 deduction as well as depreciation under 32(1). Supreme Court said no double deduction with respect to the same business outgoing unless expressly permitted by the statute. Two allowance cannot be and are not intended to be granted in respect of the same asset or the same expenditure. Looking at this logic, it appears you cannot both get